It is 7:13 a.m. Pacific Daylight Time. It is the 22nd day of May 2026. Happy Bitcoin Pizza Day. That's right. It's May the 22nd, so that is Bitcoin Pizza Day. So you will see tons of pizza pics all over social media. If you are anywhere close to the Bitcoin field of dreams, pressure on Bitcoin today. And it might be because of Mark Cuban. Who knows? This is going to be a much shorter episode of Bitcoin, and because I've got a hike to go on with my wife. So let's just get into it. Mark Cuban sells most of his Bitcoin, calls it a failed hedge. This is Micah Zimmerman out of Bitcoin Magazine. Billionaire investor Mark Cuban has parted with most, not all, but most of his Bitcoin holdings, saying the asset failed to deliver on its core promise as a hedge against fiat currency weakness and geopolitical turmoil. Cuban made the remarks during an interview with Front Office Sports, where he said Bitcoin, quote, has lost the plot. The Shark Tank personality and former Dallas Mavericks owner had long positioned Bitcoin as a superior alternative to gold, citing its fixed supply and decentralized structure. That conviction has eroded. Quote, I always thought it was a better version of gold than gold, but gold just blew up and went to $5,000 and Bitcoin dropped. The billionaire pointed to price behavior during the U.S.-Iran conflict as the moment his confidence broke. Gold surged through the period of heightened tensions, setting a record above $5,500 per ounce earlier this year. Bitcoin, meanwhile, struggled to hold momentum, and Cuban said he expected Bitcoin to rise each time the dollar fell, but it did not. Quote, every time the dollar dropped, Bitcoin should have gone up. It's not the hedge I expected it to be. The data does offer a counterpoint to Cuban's critique. Since the first signs of U.S.-Iran conflict emerged in late February, Bitcoin has risen more than 16%, while gold itself has fallen over 15%. Bitcoin defenders argue that framing matters. The asset's performance depends on the window of analysis chosen. Cuban acknowledged a distinction within the crypto space. He expressed less disappointment in Ethereum, which he sees as underpinned by real utility through decentralized finance and blockchain applications. He was categorical about meme coins and speculative tokens, calling them garbage. His earlier crypto profile was much broader. In 2021, he held a portfolio split roughly 60% Bitcoin, 30% Ethereum, and 10% in other assets. He was a vocal NFT enthusiast, displayed his wallets publicly, and even accepted Dogecoin as payments for Mavericks merchandise. He once predicted Dogecoin would reach $1 and function as a stablecoin. Cuban said the crypto sector as a whole has disappointed him by failing to find mainstream utility. Quote, it hasn't found an application for grandma, he said. Okay. All right, Mark. So this is a guy that everybody looks to as some kind of brilliant, strategic, economic, and financial tactician. He's not. Is he a billionaire? Yes, he is. How did that happen? He got lucky once, and that's all you really need. You just need to not be stupid after that. So where did he get lucky once? He was smart enough to see, and he had a real desire to listen to sports, specifically his favorite basketball team, which was not the Dallas Mavericks. I can't remember. It was like Indiana or something like that. I can't remember. So he built a website that would stream live games of his favorite basketball team so that he could listen to it on the internet wherever the hell he was. It is a brilliant idea, and he was the first one to actually do that. And hats off to him for figuring that out and being able to build it. Then he built that into a very large website that covered lots and lots of games. I cannot remember who he sold it to, but that's how he got his $1 billion. And since then, he really hasn't done all that much except leverage that money and not be stupid. Okay, he hasn't made any brilliant moves since then, but he has definitely not been dumb with his money. He bought the Dallas Mavericks and then he sold the Dallas Mavericks. This is a man who thought NFTs were the shit. They weren't. This is a man who thought Dogecoin was going to be a stable coin and get pegged to the dollar. It's never going to, nor did it ever. Not once. I mean, this is a guy that thinks Ethereum has real utility. It doesn't. It's a Rube Goldberg machine. So the problem here is that we keep attaching some kind of, I don't know, some kind of weird sainthood to this guy. So therefore, everything he says, people keeps listening to simply because he's on Shark Tank and he's Mark Cuban and he's a billionaire. So everything he does, says, and thinks must be correct. This is not the case. It's just not. The man got lucky once, and all he's really done since then is not be terribly stupid. However, I did just say that he thought NFTs were the shit and Dogecoin was going to be a stable coin. I mean, these are just idiotic. So let's get on to this next one. U.S. lawmaker unveils bill to codify strategic Bitcoin reserve and draws bipartisan support. This is Micah Zimmerman out of Bitcoin Magazine. Nick Bagich out of Alaska introduced legislation on Thursday to permanently establish a U.S. strategic Bitcoin reserve, unveiling the American Reserve Modernization Act, otherwise known as ARMA, a bill designed to codify President Donald Trump's March 2025 executive order and give the reserve a durable legal foundation in statute. The measure, which has garnered bipartisan support from more than 12 co-sponsors in Congress, would task the Treasury Department with overseeing the reserve while creating a separate digital asset stockpile for federally held cryptocurrencies other than Bitcoin. Begich drew a direct comparison between Bitcoin and gold, arguing the market has already determined both assets as the dominant stores of value in their respective classes. Quote, when you look at gold, it is the dominant precious metal reserve, Begich told Fox Business. When you look at Bitcoin, it represents about 60% of all market cap for the entire crypto space. So the market has decided, in the case of gold and in the case of Bitcoin, that this will be the predominant stores of value within those asset classes. ARMA builds on the earlier Bitcoin Act, which Begich originally introduced in March of 2025 alongside Cynthia Lummis. The updated legislation would authorize the Treasury to acquire up to 200,000 Bitcoin per year for 5 years, with all holdings locked for a minimum of 20 years. The U.S. government currently holds an estimated 328,000 Bitcoin accumulated through law enforcement seizures, including proceeds from the Silk Road takedown and the 2022 Bitfinex hack recovery. Co-sponsor Pat Harrigan underscored the urgency of giving that existing stockpile a strategic home. Quote, the United States government already holds billions in seized Bitcoin with no coherent strategy for managing it, and that needs to change, Harrigan said. The bill's introduction comes amid a broader wave of crypto-friendly legislative momentum in Washington. The Senate Banking Committee passed the Digital Asset Market Clarity Act in a 15-9 bipartisan vote on May the 13th, advancing a sweeping regulatory framework for the crypto industry to the full Senate floor. Two Democrats, Ruben Gallego and Angela Alsobrooks, crossed the aisle to support the measure. Cynthia Lummis signaled the bill could reach a Senate vote by mid-June, though she cautioned that timeline may be too optimistic. The legislative push also arrives as the Treasury Department intensifies pressure on crypto-linked illicit finance. Under Operation Economic Fury, the U.S. seized nearly $500 million in Iranian cryptocurrency assets as of late April, reinforcing calls for a comprehensive government strategy to manage said seized digital assets. the White House has separately signaled a formal announcement on the operational status of the strategic Bitcoin reserve is imminent, with the senior administration official saying a key legal hurdle has been cleared. That's the end of the article, but we haven't heard anything since. So take that last part with a grain of salt. And now let's move over to the House Oversight. The House Oversight Chair has launched a probe into insider trading on Kalshi and Polymarket. Naga Avan Nemeo from The Block. House Oversight and Government Reform Committee Chairman James Comer sent letters on Friday to the chief executives of Kalshi and Polymarket as part of a congressional inquiry into insider trading safeguards at the two largest prediction market platforms. The letters request documents detailing how each platform verifies user identities, enforces geographic restrictions, and detects anomalous trading activity. Comer announced the investigation of CNBC's on CNBC's Squawk Box, citing trades tied to the elections and U.S. military action in Venezuela and Iran. He told the network he wants to determine just how widespread insider trading has been and build the case for legislation that would bar members of Congress, administrative officials, and government employees from trading on prediction markets altogether. Both Polymarket CEO Shane Copland and Kalshi CEO Tarek Mansour have been asked to produce the requested documents and communications by June the 5th. The probe lands against a backdrop of documented incidents on both platforms. A U.S. soldier was arrested in April for allegedly using inside information about the ouster of former Venezuelan leader Nicolas Maduro to net roughly $400,000 on Polymarket. And separately, a New York Times investigation found more than 80 Polymarket users placed suspicious trades, including wagers made hours before U.S. and Israeli strikes on Iran. All right, so what's going to end up happening here is that these CEOs of Polymarket and Kalshi, and probably there's like two or three others, I guarantee you they're going to be hauled before Congress to testify in an open hearing at one point or another, and it's going to be after it's going to be after June 5th when they deliver these documents that Congress wants. But I guarantee you're going to see that. You're going to see at least Polymarket and Kalshi CEOs, or some of their other C-suite guys, but probably the CEOs, up before Congress testifying exactly what Polymarket is and how they are going to do the things that honestly they're not going to be able to do. Nobody is going to be able to figure out a way to make it where no government official can make bets on Polymarket. Because I can just call my cousin and say, you make it for me and we'll split it 50-50. They have an impossible task before them. And then there's SpaceX, which heads into a historic IPO with $1.45 billion Bitcoin treasury on its books. Yikes. The question is he going to sell it? Micah Zimmerman, also writing for Bitcoin Magazine. SpaceX filed its long-awaited S-1 with the SEC on Wednesday, and it is bringing a substantial Bitcoin position into the public markets. The Elon Musk-held aerospace company holds 18,712 Bitcoin, valued at approximately $1.45 billion, according to the S-1. Damn. The coins were purchased at a cost basis of $661 million, or about $35,000 per coin. And that stake makes SpaceX the seventh largest known corporate holder of Bitcoin in the world, and they're still ahead of Coinbase. SpaceX is targeting a NASDAQ listing under the ticker SPCX. The company has been valued in private markets at $1.75 trillion, a figure that would place it above Tesla by market capitalization and make it the largest public company to carry Bitcoin on its balance sheet. SpaceX's Bitcoin journey dates back to 2021, when Musk added the cryptocurrency to the company's financial assets around the same time Tesla made its own $1.5 billion purchase. The company has since trimmed its holdings before the S1 confirmed a far larger portion of 18,712 coins held as of December 31st. And now they're tracking that stash at 6,095. With a cost basis of $35,000 per coin and Bitcoin now trading above $77,000, SpaceX is sitting on paper gains of roughly $789 million. It's nothing to sneeze at. The position represents a small slice of the company that posted $18.7 billion in revenue in 2025, led by Starlink's $11.39 billion contribution. The IPO introduces new disclosure obligations. Under FASB fair value accounting rules that took effect in 2025, SpaceX will report its Bitcoin exposure in quarterly filings, making the position visible to every public market investor. Future financial reports will reflect unrealized gains or losses tied to the Bitcoin price swings. It's the same volatility that led Tesla to sell the bulk of its own holdings in 2022. Tesla disclosed holding more than 11,000 Bitcoin in its first quarter filing, worth close to $900 million at current prices. And when SpaceX lists, it will join Tesla on the short roster of public companies that treat Bitcoin as a balance sheet asset, a cohort still dominated by Strategy, which holds more than 843,000 Bitcoin, north of $64 billion in value. SpaceX, the SpaceX S1 is one of the most anticipated filings in years, and for Bitcoin watchers, it is the most significant corporate disclosure of 2026. And that's the end of the article, but it's not going to be the end of the fear, because now we know what Elon holds in SpaceX, and we know what he bought it for, and now every quarter is going to be a FUD fest, because it'll be like, oh my God, will he have sold it? Will he have sold it? And it's like, oh my God, it was just beating ourselves up for no apparent reasons on this FUD, but it is going to be a FUD generator, so just be prepared, man. Be prepared. All right, finally, like I told you it was going to be short today, Polymarket team says user funds safe as exploit losses climb above 600K. Yes, Polymarket looks like they've been hacked. Zoltan Vardai out of Cointelegraph. Polymarket confirmed a security exploit that affected part of its infrastructure, pointing to a possible private key compromise involving a wallet used for top-up operations, while saying user funds and market resolutions were safe. In a Friday post on X, Polymarket developers said contracts and core infrastructure were unaffected. Polymarket product lead Akashu Jain and multiple other Polymarket employees also said user funds and market resolutions are safe. Blockchain investigator Zach XBT first flagged the exploit as a compromise to the Polymarket-linked UMA conditional token framework adapter contract on Polygon, with the exploiter draining at least $520,000. However, Josh Stevens, Polymarket's vice president of engineering, said the contracts were safe and that the exploit was limited to a 6-year-old private key used for internal top-up operations. All permissions tied to that key have been revoked. The UMA CTF adapter is an Oracle contract used to help resolve Polymarket prediction markets through UMA's optimistic Oracle. Polymarket is the world's second largest prediction market, with $3.7 billion in monthly trading volume, according to DeFi Llama. All right, so there you go. Like I said, it was going to be a short show today, and it is a short show. I hope you guys have a wonderful Bitcoin Pizza Day and an even better 3-day weekend if you are able to take Memorial Day off. Do some barbecuing for me, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.